Hi, this is Charles Kelly, Money Tips. Hope you're having a great day. I've just got back from a property mastermind meeting in Peterborough today, so I'm feeling all pumped up and ready to go. And I'll tell you more about that later. Today I'm asking you the question, will property prices rise or fall in 2020? Well, that's obviously the big question. We're all on the back of a general election victory, which saw Boris Johnson gain a majority. And you could call this the Boris bounce that everybody is expecting. The retail sector is not feeling that Boris bounce. In fact, there's a couple of bits of news out today that another retail chain called Bealls has gone into administration, and we know that lots of big retail outlets were in trouble. Debenhams have been closing down stores, as has House of Fraser and other stores that just disappeared completely. I mean, this is partly due to online spending, but it could also be due to the fact that people are holding back on spending or haven't got as much money. Now, more serious than this is the company that owns a lot of these retail shopping malls, if you like, a company called Into, is also in a bit of trouble. They've asked their shareholders to stump up more money. Now, when you're a public limited company, you can go back to your shareholders and ask for more money. When it's revealed that trading has been difficult, obviously there's some empty units there. Perhaps they feel that some of their tenants are not going to be able to pay their rent, or might come back and try and renegotiate their rent, which they can do if they go into administration, or just come back and say, well, look, we can't afford it. What can you do? Into owns places like Lakeside and lots of quite large. I think they were trying to buy West Side, what do you call it? West something in Shepherd's Bush and Stratford, and I think they were Westfield. That's what it is. They were trying to buy that. So they're one of the big players in the shopping field. They've got a big site in Watford as well. And if they're in trouble, then something is not right. But anyway, that doesn't necessarily directly affect the ordinary sort of high street property prices. But people are expecting. The experts are saying that property prices will rise in 2020, but perhaps not as much as some people might think. They're not going to kind of go shooting up. That's the general view. Some of the experts there, Richard Donnell, property portal Zoopla, said expects a 2% rise. Now, last year they rose by about 1.25% overall, but in other parts of the country, that's the overall figure. But in some parts of the country they rose more, and some parts of the country they fell. But looking at mortgage brokers, there's 2 to 3% rise. So he's very Carico. They're very optimistic. But housing market commentator Henry Pryor, property portal Rightmove, Miles Shipside, they're expecting a 2% rise. Capital Economics 1.5%. These are all so-called experts, but nobody really knows. I mean, they can forecast, but you don't really know what's going to happen. Simon Rubinson of the Royal Institute of Chartered Surveyors. These are the body that regulates the chartered surveyors that survey houses. He is saying possible 2% rise, and the Halifax mortgage lender is saying, well, they're hedging their bets. They're saying a 1 to 3% rise, so they're taking a sort of each way bet there. I think prices should continue to rise, but in some parts of the country they may not rise. They may remain stagnant. So it's very much a north and south market, north and south divide. For instance, in up to 2019, October, County Durham saw the biggest average price rise at 12%. 9% in Ilkeston. But then who knows where these places are going to be next year? The next date on the list of highest risers were Sale, Wilmslow, these are up in Cheshire, I guess, Blackburn, Bolton, Burnley, Chorley, Bootle, which is just outside Liverpool, Southport, are all in the northwest of England, which saw prices rise by 6% or more. I mean, I'm assuming Manchester's done quite well there as well. Um, Obviously, affordability is still an issue, especially down in London, where prices are just in some cases out of people's reach, and a lot of people have been relying on this Bank of Mum and Dad, and then the government Help to Buy scheme, which has helped property prices remain a little bit high because all these new builds are coming on. They're getting the Help to Buy, but the new builds are inflating prices, I think, in most areas because they sell for so much more than the old build, if you like. And I think personally, the old build are built better than most of the new builds. So that's helped things go up. But hopefully there'll be a bit more confidence in the market and the economy in general, and that would suggest that prices should go up. But there's still a lot of uncertainty. There's still quite a lot of uncertainty in the economy, where you've got central banks who are just printing money. They don't literally print money off the printing presses, but they pump money into the economy using what's called quantitative easing, which basically means they buy bonds from banks, which is like a loan really. They're even buying shares apparently, so the stock market's been buoyed up by this quantitative easing. It's almost as if the central banks of Japan, the US and the EU are saying, look, we're not going to have a recession, we're just going to keep pumping money into the economy. But that doesn't quite make sense, and presumably that will lead to higher inflation, but we'll have to see. I'm not an economist, but I just know in the past that when countries have printed money, like Germany, Argentina, it has eventually led to hyperinflation, where if you had a wheelbarrow of money, this is a famous quote, if you had a wheelbarrow of money and you left it outside, people would steal the wheelbarrow, not the money, because the wheelbarrow full of money wasn't worth as much as the wheelbarrow. So that's a little anecdote for you. So that's the situation. I mean, who knows what's going to happen? All I can say is that look, you need to know your area. Yeah, I think you need to know your area. You need to know where your gold mine area is, because you will know the streets, you will know the town, you will know, if you're investing in property, you'll know which areas are likely to go up, because you can look around and see what development is going on in that area. You can look around and see if there's jobs there, if it's a popular place to live. Are there good schools? Are there hospitals? Is there employment there? Especially if you're buying to let a property, then you need to know that you're going to find tenants in that area. So that's you can look at these economic forecasts and everything, but yeah, that's fine. But it will depend on various pockets in the country. They're expecting that the northwest and the north will continue to do well as parts of the Midlands. London, I think, has been falling, certainly in central London in the last year. I'm getting agents ringing up all the time saying, would you like to buy this flat? We've just reduced it by 50,000, or in some cases that could be 10-15% of the price. And whereas a few years ago these properties were selling very fast. High stamp duty has not really helped, and taking away tax relief from buy-to-let landlords has not helped either. But we'll see. Now, estate agents are reporting an uplift in what they call sentiment in the housing market following the general election. Sales expectations has risen sharply, according to the Royal Institute of Chartered Surveyors. Now, basically, these people, of course, are dependent on the property market. Like when you hear a forecast from the Halifax, who are lenders, the chartered surveyors and various estate agents and mortgage brokers, in some ways, they're not going to say, oh, it's all doom and gloom, are they? They hardly ever say it's doom and gloom. They always say the market will level out. It will be a little bit slow this year, but it will pick up towards the end of next year. They always spin it round to a positive way. But in parts of London, prices have fallen by 10 and 15%. There's no doubt about it. But overall, in the country, it hasn't fallen in the last year, but it's certainly slowed up from the heady days when everyone could buy a property and expect it to go up by 10% the next year, in years of high inflation. When I remember years ago, I bought a property in the 80s for 50,000 and sold it 6 months later for 70 something thousand. It had gone up by nearly 50% in 6 months. which is just incredible. But you're not going to see those sort of crazy rises. Incidentally, after that 6 months, when we sold it, prices then dropped, because that was a time when Nigel Lawson was abolishing tax relief for double tax relief on mortgage interest, which doesn't exist anymore anyway. And he told people it was going to happen by, I think it was October, and he said, in 6 months' time, we're going to abolish this. So everyone rushed out and bought property so that they get the double tax relief. And that created a little bubble at the end of the 80s. But then the market was very slow in the 90s, and it picked up again in the mid-90s. Obviously it went up, and then we know what happened in 2008, 2009. As I was saying the other day, the decade to 2010 to 2020, we didn't really see a market crash like we have in previous decades. We didn't see a big stock market crash. We saw corrections, and we saw some corrections in property, but we didn't really see a big crash or a big recession. And that's the first time that it's happened for a whole decade in a long time. So some might argue, well, we're due for a correction in the stock market. We've had an 11-year bull run where markets have kind of kept going up. And, you saw some markets in the stock market go up by 30% last year. So are we due for a correction? Again, if I knew that, I'd be shorting the market and making myself a fortune, like these guys on The Big Short. That movie that if you've ever seen it, The Big Short, about the 2008 bubble, have a look at it. I didn't understand most of it, but I get the picture. So agents, getting back to agents, they said house prices rose last month for the first time in 7 months, boosted by higher activity in London and the southeast of England. This is the chartered surveyors. However, they slowed in Northern Ireland, Scotland. Some parts of the country, homeowners are hoping to sell, will be cheered by the RICS, or Royal Institute of Chartered Surveyors, monthly report. And so basically they're saying they're getting reports from agents and from their members that the activity is picking up. And sometimes that can be a bigger indicator than just reading something 3 months later. Figures out on Wednesday for another figure out here, Office for National Statistics, suggested that the UK as a whole, house price growth was accelerated with a rise of 2.2% in the year to November 2009, up from the 1.3% in the year to October. So again, it depends on the year that they take. Do they take the year to November, which is showing a higher growth rate, or the year to October, which is showing 1.3%? So you can look at all these figures and, you don't know what to say. In England, they said the average price increased by 1.7%. This is in England. Obviously, it doesn't include Scotland and Wales. So the average house now is £250,000 in England. But that's such a big area. You've got parts of England where you can buy a house for £20,000, and other parts where there could be 20 million or 30 million. So these figures don't make sense. I think if you're an investor and you want to get into property, first of all, learn about it, learn how it works. Go on a free course even to learn about it. I can direct you to a free course if you contact me through Messenger or charles@charleskelly.net, and learn how it works. I was on what's called a mastermind today, which is an ongoing program, because sometimes you go on these courses, you feel all pumped up when you come back, I want to do this, I want to do that, and then then life takes over. You get back and you've got things to do and your letters to answer, and then you got to work, and in the end you might never do anything from that course. But I'm what's called a mastermind group, where I go back every month for 6 months, and you've got this accountability. So you have to talk to a mentor and see, what have you done last month? What are you going to do next month? And maybe direct you. So I've been in property for 30 years, 40 years, but I'm still learning. There's always new things you can learn. I saw a talk today by a town planner, which I learned things from that guy. I thought, well, that's interesting. I've never looked at it that way. So there's always things you can do. So that's what I've been doing today. So and I think that is a good way of doing things. Everyone should have. I think if you're going to be successful, most super successful people will say that you need to have a coach or a mentor or a mastermind group. In fact, mastermind is nothing new. It goes back to, if you think about Napoleon Hill, Think and Grow Rich. This is my battered up copy of Think and Grow Rich, and one of his chapters in the book, one of his major suggestions was forming a mastermind. And it's one of his big principles, which I can't find at the moment. But this is written, I think, sometime in the 30s. So there's nothing new about mastermind, and here it is. Step 9 towards riches: the power of the mastermind. So there you go. An economic principle and a psychic principle give you a remarkable cooperation alliance. Mastermind power helps you accumulate money and keeps your money growing. Think and Grow Rich. Yeah, great. Think and Grow Rich. Good book. And it's one of the classics. It said, think and grow rich. And then the first chapter said, think and grow rich. First of all, decide how much money you want. Then decide what you're going to give in return for the money. I thought, okay. Because he said there's no such thing as something for nothing. So I thought, well, there's always a catch, isn't there? It says think and grow rich, but I thought you could just think and go, the money will come, the money will come. But no, you can't think and grow rich. You have to think and then do something. So that title is a bit of a concept, one of the great titles of all time. My own book is Yes, Money Can Buy You Happiness, because I think money can buy you a little bit of happiness. It's not the be-all and end-all, I agree, but it does make a difference. It makes a difference. When somebody is in need, when they need money. If you get sick, you need money. You need money to be able to take time off work. There's thousands of examples there of why money can buy you happiness. And if you don't think it buys you happiness, try being broke, try being poor. That doesn't make you happy. And some people say, if you don't believe money doesn't buy you happiness, if you don't believe that money buys you happiness, you're not shopping in the right places. But in there I go through how to accumulate money as well, and we talk about ideas and building your wealth and managing your money. So there you go. Property prices we expect will rise in 2020, but on average by 2%. But if you're in Scotland, it might be less. If you're in the Northwest, Midlands, maybe even London, it might be more. Who knows? But if you want to get into property, contact me, and we'll find a way of getting you onto some of these courses are free. You can go on a course where you can do 2 or 3 days, or even a day taster, where you can get an overview of how the property market, various strategies. Like, do you want to go into single buy-to-let properties? Do you just want to buy a flat or a house and just that's it, put a tenant in? Or do you want to go for something that will give you more income, like a HMO, a house in multiple occupation, where you might buy a house and convert it into 5, 6, 7, 10 rooms, and that would generate more cash flow? Or do you want to go into serviced accommodation, where you turn your flat house into serviced apartments, which again are even more lucrative, can be more lucrative than HMOs? Or do you want to go into developing, buying small properties, refurbishing them and then refinancing them to get your money out, or maybe selling them on? Do you feel that you could find deals for other people and therefore do deals with none of your own money? Yes, you can get into property using none of your own money, using a number of strategies that are taught on these courses. So if you want to get into property, just contact me. And even if you haven't got any money, there are people I've met today who are really killing it. They're out there doing deals with none of their own money. Some are doing rent to rent, where you take on a property on a long-term let, and then you then rent that out as a HMO or serviced accommodation. The landlord gets guaranteed rent, and you get the difference and the profit on top. Lots of people are doing that to generate almost immediate cash flow with hardly any of their own money. And some of the people I've met have only been in the country a year or two, and they're into property, and they've got no equity in another property, they've got no money, but they've managed to go out and do it. Not just using rent-to-rent strategy. Sometimes it's deal packaging, finding deals for other people. Can you find a deal for me? Could you find a deal that would work for me? Can you source properties? Can you source below market value properties? If that's the case, you can make money from that. You don't have to just give them away, or just say, oh, I'd like to do that, but I can't do it because I haven't got the money. Why not bring in a partner, a joint venture partner? Why not package it up for somebody else and make money that way. Lots of people make their living just from packaging deals, and they package hundreds sometimes in a year, and they can earn anywhere between £2 and £5 and even £10,000 per package, depending on the value of the deal. So there's lots of ways out there of making money. So why not learn something, make 2020 your best year ever? And this is only if you want to get into property. If property is not your thing, that's fine. It's not for everybody. But I think it's a great way of investing money, because you can raise finance on property very easily. You can find people who will lend you money privately. You can find joint venture partners, and there's all sorts of things you can do with property. Property is a great asset. People have to live somewhere. There's still a shortage of property in the country, so they still have to keep building, and the population is still growing. People are living longer. There's more divorces. There's all sorts of reasons why property, I think, is a good investment, and also it's tangible. It's not Bitcoin, is it? This is something that you can feel and touch and refinance and raise money on, and you can do all sorts of things. If the market changes, you can change the property, change your strategy. So there you go. You've probably had enough of me for now. So thanks for listening. Thanks for people who tuned in on Facebook Live. Great to see you. And thanks for people who listen regularly on my podcast, which you can find on iTunes, Stitcher and Anchor. So thanks very much, and contact me if you want to get into property, and I'll show you how, and I'll show you how to make 2020 your best year ever, even if you haven't got any of your own money to invest. Okay, thanks for listening, and good night.